Deepali, I'm going to bring the number to you, 0.1%. What do you make of it?
I think it's, for once, the IIP number is not extremely surprising. My 1% was rather on the higher side, and I was assuming a negative growth in all of the major components, including basic goods, capital goods, intermediate goods, which has been pretty much in line with trend. So, for example, in the last 3 months, if you look at the average of any of the major components, it's been in the negative. It's only the consumer durable segment, which the number I'm interested in, consumer durables and non-durables, which may have, given it some kind of a push whatsoever. What will be interesting to see now is, one, I think the trend which I expect to continue is intermediate goods continue to register a negative growth, trying to give you a sign that investment cycle has not yet picked up. Consumer non-durables should have done well, given the fact that you're still seeing some kind of momentum on the rural consumption side from the FMCG sector. So all in all, I'm not at all disappointed by the number. I think it's pretty much in line with what the street would have expected.
I'm going to come to you then, Mr. Chacko. How would you react to this number of 0.1%? We have some of the other internals. The mining growth is at negative 3.1%. You've got the manufacturing, which is at 0.1%. You've got electricity growth, which has come in at 4.6%, and capital goods at very volatile component. Data indicates that it's at minus 16.3%. How would you read into all of this?
I would say that considering the low base, I think 0.1% is low. We expected a little higher than that. But let's face the facts that in difficult times, and perhaps this is a good way to face the situation. You have all the crises appearing right now with Greece coming on June 17th, and perhaps it's a Lehman situation where let's get the worst situation and then the policy will come into action. And while Gul says, okay, let's take the small steps also, but I think there's a time now for bold action, and it can only improve. At least it's positive.
Right, if I could just bring it to Aditi. Aditi, the consumer non-durables number has grown at 5.4%. Consumer durables has grown 5%. Would you say that that is reflective of, consumption still being strong?
See, broadly, the 5% numbers that you're mentioning are in line with what we had expected for the month of April. And when we look at the consumption story as a whole, we do see that there is fatigue in some sectors, but overall the consumption momentum hasn't eased off very substantially. So that is, remains as a positive. Going forward, the monsoon would obviously be critical, not just the fact that it started reasonably on time, but also how the dispersion, both in terms of the timeliness as well as the spatial dispersion, it takes place over the next few months. So I think that's really going to critically impact the consumption momentum going forward. The other number that I heard you mention was a minus 16% on the capital goods. I think that's something that's definitely weaker than what we had expected, and confirming that, there is yet to be any pickup on the investment side.
Gul, wanted to get in your perspective, because if we talk about the fundamentals of the Indian economy, you have the cup seems to be overflowing with a lot of those problems. The rupee also seems to be going for a toss now at 56 against the greenback. Once again, do you think that these numbers are indicative of the actual state of the economy?
Frankly, the way I look at it is, the only fact is that the same guy gives you these numbers. Otherwise, you and all, everybody knows how reliable these numbers are. But having said that, I think the fundamentals have been deteriorating over the last couple of years after this 2G situation emerged, and government, as you know, has been in policy paralysis. And hopefully with oil prices coming down, and if the other commodities have come off, and gold imports, as we learn, have come down by about 40 or 50%, if these things continue, then obviously our current account deficit, not because the government has done anything, but because on its very own, has stabilized or will be better than the 4% that we saw in 2012. So hopefully the rupee also will stabilize, but if the government doesn't act on it, even now, inflationary pressures, as everybody tells you, these are supply side situations. If we don't kind of take action on infrastructure, then I think we have a pretty dismal picture going forward. And if the monsoons don't support us, then I think all bets are off.
The markets seem to have edged up into positive terrain, though they are having a little bit of trouble maintaining those levels. Mr. Ashok, wanted to come to you. Where does this number now leave the RBI, and what kind of policy action are you expecting?
personally expect the RBI to at least trigger the whole thing with another 25 bips rate cut. I think that would be a big fillip to the whole process of a kickstart to the economy. I think that's a big thing to happen. Hopefully, with the investment climate being what it is, the growth what it is, we need some kickstart. I mean, I personally feel that there would be on 18th rate cut. I honestly believe so. With inflation sort of going south on falling crude oil prices, there's a possibility that RBI may look at it more seriously.
Mr. Chakka, would you share that same view?
Well, to get the mood, yes, because it's a matter of sentiment, not necessarily economics. I think that's why they did the last time too. But inflation is a factor which has been tempered only by the reduced crude oil prices. But we have a trade deficit, and to some extent, the 40% drop in gold has had a positive effect on that. Otherwise, it is something like 68 billion, and that's really not really a very productive import. And there's a price at which the duties can be put so that you don't risk get it moving back to smuggling. But those key factors, if we bring in, a rate cut would set a positive mood, even though from an economist's point of view, I doubt if that would be the right thing to do.